Welcome back to the channel, Crypto Trend Trader, with a quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Are we looking at Bitcoin? I'm on the 4-hour right now, and essentially what we're taking a look at is we broke through that channel right here, the top of that white channel. We broke through it, and then after we broke through it, we couldn't maintain price action. We dumped down back to the heart line of the channel. We then found support and consolidated in this range, and we essentially started forming this double bottom pattern right here with the white line acting as like our neckline for the double bottom. So as soon as we broke through that line, we essentially get our measured move up, which is the distance from the pattern's top to right here. I didn't count this massive wick right here. I'm counting the actual consolidation pattern itself because this is just so much of a like liquidity hunt basically, or like a stop run. But essentially once we break out to the top, we get our measured move, exactly the distance to the top right here, and then we found resistance essentially between the 786 and the 886, and then also on that top yellow line, which was the alternative line for the top of the channel. So we have been looking at the white line and the yellow line depending on how we kind of angled it. So and then we essentially just got our sell off, came down from the 886, 2 fib levels, and then consolidate on top of the 618. We did get the wick down almost to the 0.5, and it looked like we were going to close the 4-hour and the daily below this, but we closed right at it, and now we're consolidating on top of it as support, and essentially going to attempt to push back up to the upside. So what we're paying attention to priority wise right here is, are we going to come back up to the 886, get rejected, and then come back down, or are we going to come up to the 786, get rejected and come back down, or we're going to come up to the 886 and take out this little high right here, and that was just us gaining a little more strength, and then we can get that move up to the top, put in the new high, put on full divergence, and then potentially get the move to the downside. But how it looks right now, we moved basically back above with the histogram, like I said, and if we stayed here long enough, we would flip this back over blue, positive slope, but that did not happen. We sold off, came back down below it. As soon as we put in 2 consecutive red histogram wicks, we know it's going to be continuation to the downside. And then just like we said here, we were in the bearish control zone. Distribution is taking place. We exit the bearish control zone, and we get the hard sell signal at the same time, as well as the knife stabbing down here also. So at this point in time, it was a powerful sell-off, but if we compare the power of this and the power of this, you'll see this took us down lower, that took us down higher, so there's no divergences taking place. We're seeing convergence within the indicators, and typically the reason we're looking for divergences is if we're running out of steam on a trend, or if like they're trying for a reversal and it's failing. But in this case, we're not seeing that. We're seeing convergence. So what it looks like is going to happen is, it looks like we're going to get that retest back up to the upside and attempt to take out this high right here. And if we can take out that high and consolidate long enough, I think we'll take out this high too. And I think honestly, what we're looking at right now, if we can't get back up there and take out this high, what we're looking at is essentially like an Adam and Eve top. This is our Adam right here, and that's our Eve. And then when we come back down here, to this level right here, if we come back down to that 11,000 range, we'll have broken through basically the neckline of that pattern. So we have like the pointy top, that's the Adam. We have the round top, that's the Eve. And then if we break through essentially like this neckline support down here, we'll get our measured move. And once again, the way you do the measured move is we're just going to take from the top of the pattern down to the neckline, and then that would be from where we break the neckline, our measured move. So essentially, if we come back down here to the neckline and then we fail to hold this pattern and break out to the downside, you'll see I already have my targets in place for a bullish accumulation of the bearish sell-off. So essentially, if this comes down to here, that's going to line up perfectly with the 382, which would be like our basically like our more bullish consolidation before a continuation to the upside. But we already came down here and tagged it once, so I would expect us to not get lower wick, but potentially we could get a lower close on a 4-hour without actually breaking through that and then continuing. But if we do break down below this heart line, or the neckline right here at 11,000 and let's say 50, if we do break down from that, the measure move is going to take us down to the 618, which anywhere from the 382 to the 618 is the golden zone for a typical Fibonacci retracement, and that's going to be of this entire move. So that's from down here at 8,800 up to the 12,000 mark, and then back down would be 618 would be back down here at the 98.91. And you'll notice that the 98.91, that's going to come in line with actually, let's start here. You'll notice that the green target right here, which is the 382, is going to come in line not only with our support at 10.8, but it's also going to come in line with the heart line, which we've been finding support on, and the 382 as well. And then on top of that, if we sell down through that and we get the full measured move, that's when we're going to run into the bottom of that same channel that we've been operating in. And then that's going to be also our 618. And then that's also going to coincide with some of our previous support and resistance zones. So you'll see previously this was resistance all through this area right here. So when we come back down to it, we would expect to find support, at least initially, on it. And the same with this area right here. It's not just going to sell straight off there. I would expect for us to come down, get an attempt back up, and then if that fails, get the sell off and the measured move. So, and again, the indicators are lining up. That's what we're looking for. We're looking for a confluence. That's going to give us the best chance of success on a trade and allow us to essentially like have an edge on the market. And now you'll see I've switched over to our moving averages, and often our moving averages will coincide with our horizontal and diagonal support and resistance. And you'll notice here on this candle right here, as soon as we sold, this candle right here, as soon as we sold off, we took out the parabolic SAR. We tried to take it out right here and got support back up above the 21, closed, and then we sold off and took it out. That's signaling now that we're going to go into a consolidation or a downtrend. Okay, so I would expect continuation at least for, you know, a day or so. I mean, to the downside or whatever at the minimum. You typically won't see just like 1, 2, 3 dots, something like that. You typically see a few more than that. Now it is possible we come back up here and take it out and flip back over green, in which case I would expect, you know, potential continuation. But at this point in time, essentially what happened is we sold down here, closed below the 8, started dragging it down, and then we sold through. We were able to push back up to the 21 in yellow right here, but we could not close back above it. So now we've opened at that 21, and now we try to push to the upside, and it looks like it's potentially going to fail. So then that would give us an open, and if we close down below 11.6, that's going to give us an open and close below the 21, in which case we would expect to see continuation. And because we wicked down here already to the 50-55 in green, you know, you would expect when you do see continuation that it's going to come down to our next moving average, which in this case is going to be our 89, and depending how long it takes to get down there, that's going to line up at 11,050, which once again is lining up exactly with our horizontals. It's going to be our support right here, and then of course that will be essentially like the bottom of the pattern of the Adam and Eve. If we should break to the downside, that's what we're expecting to happen. So once again, the moving averages can do a lot of the same things as well. And then you'll notice also that we have our binary pivots in here, and you'll see that's like the blue and the purple right here. And essentially what that's doing is it's essentially like clearly putting our range. It's clearly establishing our range. So you'll see we're ranging support right here, and then we're ranging resistance right here, and now the resistance has tightened up a little bit, and we've attempted to push it up, but now it's starting to flatten over here, so it's forming a flat resistance on top. And then you'll notice we started pulling up the support on the bottom, and now we're forming that flat support on the bottom, and that's right at that same range as the moving average. So when we do come down here, we're expecting to come right down to that area, and then that's when we're going to find support, and we're going to expect to bounce. And then the bounce from there is going to tell us what we can expect from the market based on volume, based on strength, etc. Because you'll notice we got a lot of volume when we sold off right here, but a portion of that was buy volume and portion of it was sell volume, because we have a wick at the bottom here. So there was buying and selling taking place, and then we consolidated. But since then, we've put in almost no volume. Now granted, this candle right here still has plenty of time, so it could put in a bunch of volume right now, but the one right afterwards, that was essentially the pump back up, had no volume behind it. It was very, very little volume. So what we would expect here is the rejection, come down, the 89 to act as support, bounce back up, and then potentially get rejected at that 11,354, which would essentially just be finding our 50-55 as resistance now that we've broken below it. And then at that point in time, if that's the case, we would expect to come down here to our 200s. And I think overall that's basically going to once again line up with our targets. If we pop this back up, the first 200, the exponential, is going to line up with the 0.5 exactly, and then you'll notice the 200 simple moving average is going to line up with the 618. It's going to line up with the target of the break of the pattern, and then you'll see also we have our 377 and 528 down here as well. So but if we do get past, if this sells off and we go past the 618, it won't look bullish to me. If we sell off and we can find support at the 382 or the 0.5 or even the 618, we could potentially still be bullish to the upside. But typically when Bitcoin is bullish, we will not get down to the 618. Typically when Bitcoin's bullish, you'll get down to the 382 or the 0.5, and that's it, and then it's off to the races back in action. So if we do see it come down that low, I'm going to be much less, it's going to look much less likely that we would get continuation to the upside. So let's see, and then we can switch over now to our daily, and you'll see the daily here will give us a little bit clearer of an idea as to the channel and everything. Now it's the same resistance support channel, everything that we've been using for a while, but essentially we have our long trending yellow line right here, which is a previous long trending support resistance parabolic line, and that's where we've been finding resistance this whole time. We got above it, couldn't maintain it, couldn't get above it, couldn't get above it, couldn't get above it, came up, couldn't get above it, got above it, couldn't maintain it, couldn't get above it. So now here we are right now again doing the exact same thing we were saying before. So what we need to see, it's great that we're above that white finding support right here on that channel and everything, but the truth is until we can get above that yellow, consolidate, and then get moved to the upside, you know, it's still going to look like this is just going to be like one more failed attempt. And because it's a diagonal like this and not a horizontal line, you're not going to expect to eat through the resistance in the same way. When you have a horizontal line and you continually come up and you test resistance, test resistance, test resistance, eventually you wear through that, and then you get that burst through and it's no problem because you've already taken some of those sell orders out of the books. And then when you finally get up here, there's enough buy orders, it liquidates the sells, and then you can consolidate above it. Now that's not necessarily the case with the diagonal because it keeps changing. So not everybody's going to be looking at this diagonal. Not everybody's just going to have static orders in the books. So it's much more of a dynamic resistance or support. So, but again, that's just going to take us basically, if we can't make it right there, it's going to take us back down to the heart line, potentially back down to the bottom of the channel. And then worst case scenario, we're going to come back down all the way down to that 9,200 range right here and just try to find support again on top of that horizontal support line. But worst case scenario at this point in time, if we did just get a massive sell-off, I think we would find support on our green parabolic trend line, which would put us at 7,500. Now, I don't think that's even realistic or reasonable of a target right now, but we are looking at the daily right now, and you'll notice that we have that same signature that we got on the shorter time frames. We got above the moving average. We were able to flip it back over blue, but now we get multiple histograms in a row. What did we say? 2 in a row, and we get that sell-off, and then we come here, we got 2 in a row now, so I would expect us to get another sell-off. We're exiting the bearish control zone. We're getting the hard sell signal. I would like to see something out of the knife right here to the downside. We've gotten a strong knife stab up. I would like to see either another one up and develop divergence, so put in a higher high, but lower on the oscillator, or else vice versa. I would like to see basically this sells off here, we get the knife come down, and then we can see that there was a powerful sell-off. So, and that's potentially going to be like exhaustion if we can see divergence on that. And then let's switch over to our weekly time frame. And once again on the weekly, we were able to pull the histogram above the red slope line on the TJD TDMACD, but again the slope line is still red, so we need to maintain above the red line long enough so we can flip the slope back over blue and potentially get continuation to the upside. But at this point in time, if we can't maintain price action up here long enough, we'll eventually do exactly what we did on the 4-hour. And then finally, let's switch over to the Bellina Cessna, and this is going to show us the weekly in blue and pink right here, and then it's going to show us the monthly in orange and yellow right here. So you'll see what happened was the orange and yellow on the monthly came down. They were about to cross to the downside, and then actually were able to maintain. So the orange found support on the white here, and then we're getting continuation to the upside. And now the same exact thing is happening on the weekly. The blue came up here and started to sell off, and now it hit the pink, and now we're getting continuation to the upside, or potentially getting support bounce to the upside. And that's the type of signature. If we develop like a weekly divergence, something like that in this range right here, that's going to be potentially like the catalyst for like an actual sell-off correction. But to tell you the truth, traditional markets, crypto, everything, it does not look that strong to me right now. And based on like what's going on like fundamentally with the economy, and you know, with the stimulus, and with the Democrats and Republicans going back and forth with each other, you know, there's a lot of indecision and a lot of ambition, or a lot of positive energy has already been priced into these markets. So a lot of times what happens is, like with earnings, you can have like great earnings, but if the greatness of the earnings is not greater than what people were expecting the greatness of the earnings to be, it's still a disappointment. And it's the same with like the unemployment numbers. If they're predicting like 1.5 million unemployed, which is horrible, but then we only get 1.3 million unemployed, it looks great because everybody was already pricing in the 1.5. So, the market will pump because we didn't have as many unemployed, and vice versa. If we're pricing in 1 million new unemployment claims, and then all of a sudden we get 2 million unemployment claims, it's way worse than what the market is expecting, and then you'd expect the market to sell off, obviously, based on that information. So and then finally, we will just switch over to the actual monthly, just so that we can get a clear picture on what's going on here. And you'll see we got basically the blue uptrending line on the TJD TDMACD, consolidate all through that zone. And then you'll notice that we were actually still below it when we flipped it back over blue. And this is typically an unreliable signal. It typically means that when we come back up to it, we're going to find resistance and then sell off. But in this case, we actually came up to it. Oh, we did. We actually came up to it, found resistance. That was the top, and then sold off. But we were able to maintain on top of it long enough, and then we came back down below it, but we kept this blue the whole time through. Now, the longer we go sideways here, though, the less it will take to flip this in either direction. If we just maintain sideways here, the slope will be almost neutral, and then it's easier to flip up or down based on price action. But as long as this histogram is green and moving to the upside, that's going to look extremely bullish for continuation. But finally, the thing I want to pay attention to here is, once again, once we flip that parabolic SAR over negative and we get the red here, and that's lining up with the binary pivots here, we now have like an extremely strong resistance zone. And then when you take into account also, that was our previous market top of a close on a monthly. That was our previous wick attempt up here on the monthly. And then this is the exact same area to get again. It's going to be a strong resistance for us to get through, but it doesn't mean that we can't get through it. But typically, when you come up to a strong resistance like this and you test it, typically what's going to happen is you're going to sell off and continue to put in a higher low until you can gain enough strength and consolidate at that resistance, and then you can get the burst to the upside. So in this case right now, what I expect to happen long term on the monthly is I expect us basically to just put in a higher low. That's what I'm expecting. Now, we did put in the higher high on the monthly here, but we didn't put it in on the weekly. So this is a very important candle. And then also, like we were saying with CMEs, everybody always wants to talk about CMEs, but the CMEs failed, and so did GBDC. They both failed to put in a higher high on the monthly and the weekly. So even though we were able to do it on spot price action, typically, you could argue one way or the other, but we're obviously seeing institutional money come into this space over the last couple of years. And and that reminds me too, I want to talk about Ethereum. So we're obviously seeing institutional money coming into the space over the last couple of years. So now we would expect essentially like CMEs and GBDC, like the traditional market influence to go stronger as more money is affiliated through, that avenue. But now we still don't know 100%. You could have Bitcoin still lead to the upside spot, or you could have it lead to the upside or downside, one way or the other. But essentially, like, that's the confluence. If both of them are saying the same thing, it's much more reliable. But when you have GBDC saying one thing, and then you have, Spot saying one thing, or you have CME saying one thing, and then you have Spot saying one thing, it's much less reliable, because it's, now you're a coin flip, because one's saying yes, one's saying no. Did we close a higher high? Yes on one, no on the other. So again, that's not what we're looking for. We're looking for essentially like a confirmation trending move in the direction, expect continuation, consolidation above resistance, and a new high close basically. So at this point in time, what I'm expecting is at some point in time here, we consolidate around for a little bit, we'll get the sell off, and then we need to put in a higher low. I'm looking for a low above 6,400. We could come all the way back down to 6,500. We could get a wick down even lower. We could get a wick as low as we want. But if we can get a 6,500 close, I will be extremely bullish on this because it would just continue to look like we're entered into an uptrend confirmation. So, and the more things that we have lining up, the more indicators, more oscillators, more confluence, the more likely it is to be upside. So, or more likely it is to be continuation, correct, like actual trending move in that direction. But again, I'm starting to look, the longer time frames are starting to look more and more bullish. The shorter time frames are starting to look more and more bearish. So is it possible that we're just going to get a correction and then continuation to the upside? Of course. Is it possible that this is us topping out and we're going to get continuation to the downside and potentially take out the low? Of course as well. Is it going to happen overnight though? Nope. I think we're going to see it coming with plenty of time to react. So, and now I do want to talk about something specifically. I want to talk about institutional money and the flow and how it will essentially stabilize or peg certain assets to each other. And in this case, what am I talking about? Ethereum. Okay? Because this is what happens. People go to get into the space, all right? Institutional money. And they say, okay, what should I buy? And the guy goes, Bitcoin or Ethereum or whatever. And he goes, well, what's the difference? And then you start explaining to them, and they either don't care, they don't take the time to understand, they don't whatever. But essentially you say, which one do you want, red or blue? And a lot of these guys can't decide. So what do? You diversify. So you say, okay, I'll take, one blue and then one red. And they're different prices. So how much you want to put in each one of them? Well, I'll just go 50-50. I'll split between the two. If one of them is the old and, people are betting on that it's going to be the winner, and then one is the new, and people are betting on that, and that's going to be the winner, why not bet on both? So what do? You take your $11,645 and you buy one Bitcoin, and then you take $11,645 and you buy Ethereum, and what do you end up getting? I am very, very confident in saying that typically from this point on in the future, for the most part, it's of course possible to break this, in the event that we do get a solid breakout or whatever. But in my opinion, at this point in time, we're going to see Ethereum pegged to Bitcoin at a ratio of 32-1. And the reason I say 32-1 is obvious probably to most of you. That's the amount of staking that will be required if you were to stake your Ethereum and operate a node. So when Ethereum switches over from proof of stake or proof of work to proof of stake, it requires 32 Ethereum to run a node. Therefore, most people will say, okay, I'll take one Bitcoin and 32 Ethereum, even if I'm never going to run a node ever. And then typically what's going to end up happening is those two things are going to get pegged to each other based on that ratio. So I think that Ethereum is basically going to live in that 1/32 of Bitcoin price range. And where does that come in at right now? 11,652. So let's see what that comes out to. 11,652 divided by 32 Ethereum is going to give us a price for Ethereum at $364. And I believe Ethereum is at like 380 right now. So basically within a couple dollars, it is currently pegged to Bitcoin at that 1/32 ratio. And again, I strongly believe that ratio will be maintained as one or the other fluctuates in that direction. So as Bitcoin goes up, I think Ethereum will go up, at that same ratio. And then if Bitcoin goes down, I think Ethereum will go down at that same ratio as well. And essentially all that is just that division of assets or investments. And the main reason I think is just because most people will not take the time to understand it, don't care to understand it, or just figure I might as well bet on both. So I'm going to take the same amount of money, I'm going to put it in both assets, and then we can see which one's the winner over time. And eventually I do think that they will decouple from each other in one direction or the other, but I cannot guarantee if, which is going to be which. I mean, I'm obviously a strong Bitcoin believer, but there have been a lot of things built on, Ethereum, so the potential for it to get another parabolic run up, like it did previously is definitely possible, but I don't think it's as likely. I think, what was it? If Bitcoin got up to 20,000 and Ethereum got up to like 1,300, I think it was, you're basically looking at like about 8-to-1 ratio. So at the highs for both of these assets, essentially, now they weren't at the high at the exact same time, but if you took the highs from each one of them, that would be the ratio. So, but it's nowhere near 1/32. So basically, from that 2017 range, Ethereum was much, much stronger in relation to Bitcoin than it is now. It's actually extremely, extremely weak compared to Bitcoin at, 1/32, odds or percentage wise or whatever. So, But I just wanted to mention that it's something that I've been basically like tracking for a while, and I was pretty convinced that that was going to end up being the case as institutional money flowed in and Ethereum, you know, basically generated like just enough interest that people would want to split their investments between the two. And then obviously both being like large market cap coins, both being at the top, and then obviously like the difference between the two of them, you know, is basically like appealing that potentially one or the other could be successful in the future. Now, of course, I am a strong believer in Bitcoin and, you know, think that it will be the first mover and the last mover. But do I think that it will be the end all be all of crypto? No, I think sometime something else is going to come along that's much more useful on like a daily basis and like regular interactive like daily life. And I still to this day believe that it's going to be video game related or something along those lines, because I think that's the easiest way for a digital currency to legitimately like catch on, because you already have video games where you're using like money and credits and all this stuff like real life money and in-game money. So I don't see why there's any reason that the two can't be blended together like they are in many games now. But instead of using dollars and putting your money onto the server and essentially buying like game gold or forum gold or whatever it is that you're using to transact in these video games, I think in reality it will just end up being like a cryptocurrency, just because it can be decentralized and essentially be like transferred for such a cheap amount. You know, if you're trying to transfer through like PayPal and stuff like that, your minimum fees and bank transfers and all that stuff is just so absorbent. You cannot do those microtransactions, as where with cryptocurrency you can. And then also on top of that, you have unique item generation. So you have like video games where you have essentially like a rare item that's randomly like drops, and it will have like randomized statistics, and essentially like these items can be like recorded on the blockchain as they're generated, so that they can't be like duplicated or copied or faked in the game. So you don't have to worry about like you know, basically like illegitimate items, because it's all on the blockchain. And so that would essentially give you both two extremely functional things that would not only be like fundamentally make sense, but actually like they actually make sense like monetarily as well, because nobody wants to put $10 somewhere if you have to pay $3 in fees. You know, but if you send $10 in and the fees are 30 cents, it's no big deal. So I think that honestly that's going to be a big one. And then I think also as people become more immersed in the video game world and everything, I think that blockchain and, you know, like I was saying, essentially having like that item tagged and essentially being like uncopyable and having like that record, you know, that ledger there basically is going to essentially like eliminate any like fraudulence inside of like that digital world or that game world, because nobody wants to spend, you know, you might not believe it, but people spend hundreds, thousands, tens of thousands, even hundreds of thousands of dollars on video games, as not only for like items that they use on a daily basis, but also for like, you know, investments into the future. People buy like digital land in games and then sell it later on for more. As crazy as that sounds, it's there and it's real. So if you can essentially eliminate the fraudulence, the double spend, like the fakeness, you know, through blockchain technology, that essentially creates like, you know, the level of security that's just not there currently. So dupes and hacks and all that stuff are very common in video games. And if you're putting a bunch of money into something and then all of a sudden you get duped or hacked or whatever, there's no security. So that's part of how I think blockchain and crypto will revolutionize the world. Now, obviously, if I knew exactly how it was going to happen and how it was going to be done, I would just do it myself and then we could all be rich. But it doesn't work like that. You know, just like in old movies, you know, they look into the future and they guess what's going to be different. A lot of times they're close, but not. You know, you have like that old movie Demolition Man, and they basically have like payphones in the movie, but in the movie the payphones actually have a video conference screen on it as well. Well, they had the right idea that people would be video conferencing, but they had the wrong idea that people would still be using cell phones. Or I'm sorry, payphones. But at the time, cell phones and the technology just didn't exist, so it wasn't realistic, or it wasn't even possible. So obviously, like, if they would have thought to have cell phones in the movie, you know, they could have just been like, oh yeah, we should just make these and then we'll just all be millionaires. We don't even got to worry about this movie. So, but anyway, that's it for today. That's our crypto trend trader, Bitcoin technical analysis, touching base a little bit on Ethereum. You guys know what it is. If we cannot get back above this 21, we're going to drag the 8 down and we're going to get that cross. And when we get that cross, we saved it right here and we're able to get back up to the upside, the more times that happens, the less likely we are to get continuation to the upside. So if we get this cross down here again, it's less likely we're going to get this consolidation and then continuation, because the market's going to start losing confidence in this move. So that's what I'm expecting to happen right now. My next long-term target, could be, well, with my luck, it could be a couple of hours, but more likely, in the next few days or weeks or whatever, over the weekend, whatever it is, we could potentially get that 11,050 range. But typically, whatever move happens on the weekend is going to get like joined back up, first thing during the week. So if we sell off right here and dump back down, I would expect us to basically like float back up to here by like Sunday night or whatever, and then we can get the continuation. If we pump right up through here and start moving to the upside, exact same thing. I would expect us to come back down, retest it, coming into like Sunday night, Monday, and then, close that gap, and then we can get continuation in that direction. It's very unlikely that the two markets are just going to like explode off the spot market is going to explode off in one direction and leave behind, institutional money. Because if there's one thing we know about institutional money, it's you miss the bus, you bring the bus back. As where when retail misses the bus, you miss the bus. So there we have it for today, guys. Crypto Trend Trader, and I'm out of here.